Today, we're going to discuss something that I believe is one of the most important developments happening in the XRP ecosystem right now. And surprisingly, it's a story that most people haven't even noticed yet. We are witnessing a massive liquidity expansion taking place directly on the XRP ledger. And in this video, I want to break down exactly what's happening, why these numbers matter, what it means for the future of XRP, and ultimately, how this could impact XRP's valuation over the long term. More importantly, this is the type of institutional adoption that XRP supporters have been anticipating for years. This isn't speculation, this isn't theory, and this isn't hype. This is the actual infrastructure thesis behind XRP beginning to play out in real time. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. The first thing I want to discuss is a development that, in my opinion, has gone almost completely under the radar despite being extremely important. What's particularly interesting about this is that it has been confirmed and discussed by someone who, frankly, understands the XRP ledger better than almost anyone else. Matt Hamilton, the former head of engineering at Ripple. For those unfamiliar with Matt, he has been involved with XRP technology for years, and whenever he speaks about the architecture and intended purpose of the XRP ledger, it's worth paying attention. He's one of the most knowledgeable individuals in the entire XRP ecosystem. Matt recently discussed OUSD, a new stablecoin initiative being supported by nearly 140 financial institutions, including Ripple itself. What he said is incredibly significant because he pointed out that OUSD validates the exact design philosophy that the XRP ledger was built around all the way back in 2012. This is important because there are still many people who look at stablecoins like RLUSD, OUSD, or USDC and conclude that they somehow threaten XRP. They argue that stablecoins will replace XRP or make XRP irrelevant. However, according to someone who deeply understands the XRP ledger's architecture, the exact opposite is true. The reality is that the XRP ledger was specifically designed from its earliest days to support issued assets. Back when blockchain technology was first emerging, there were fundamentally different philosophies about what this technology should become. One philosophy was essentially anti-bank and anti-institution. The idea was that governments, financial institutions, and traditional banking systems would eventually disappear. Then there was the XRP approach, which recognized something very simple. Financial institutions are not going away. Banks are not disappearing. Governments are not disappearing. Therefore, if blockchain technology is going to achieve mass adoption, it needs to work alongside these institutions rather than attempt to eliminate them. That distinction matters enormously because it explains why the XRP ledger was designed to support institutions bringing assets onto blockchain infrastructure from day one. Whether we're talking about OUSD, RLUSD, or future tokenized assets, these developments are not deviations from XRP's purpose. They are confirmations of the original vision. This is why I believe understanding the historical context is so important. Many people are looking at current developments and mistakenly viewing them as competition for XRP, when in reality what we're witnessing is the exact institutional adoption model that the XRP ledger was built to facilitate. Think about it this way. If XRP had been created with the philosophy that Bitcoin originally promoted, that banks would disappear and fiat currencies would become obsolete, then yes, the rise of stablecoins would absolutely be a negative development. Likewise, if XRP's purpose had been to replace the US dollar or become the universal currency used for everyday purchases, then these developments might be concerning. But that was never the vision. The XRP ledger was designed to support issued assets and institutional financial activity. Therefore, seeing institutions bring their assets onto the XRP ledger is exactly what supporters should want. What's even more interesting is that we're seeing these developments occur simultaneously with a massive liquidity expansion. Over the past 24 hours alone, nearly $218 million worth of RLUSD has reportedly been minted directly on the XRP ledger. Not on Ethereum, but on the XRP ledger itself. That distinction matters because it demonstrates that liquidity is beginning to flow into the XRP ecosystem in a meaningful way. This creates more trading pairs, increases transaction volume, expands utility, and ultimately strengthens the demand dynamics surrounding XRP. This is where many critics fundamentally misunderstand how XRP works. They apply the philosophical framework of Bitcoin to XRP and conclude that institutional participation somehow undermines decentralization or weakens the asset's purpose. But XRP was never designed to destroy financial institutions. XRP was designed to serve as a neutral bridge asset that enables value transfer between different financial systems without requiring trust between counterparties. That's an entirely different objective. For a bridge asset to function effectively, there must be assets available to bridge. There must be liquidity. There must be real economic activity occurring within the ecosystem. That is precisely why assets like RLUSD and OUSD are so important. These aren't random speculative tokens with no utility. These represent actual value entering blockchain infrastructure for real-world settlement and financial operations. These are fiat-backed assets moving on-chain to take advantage of the speed, efficiency, and settlement benefits offered by blockchain technology. This is exactly the environment that Ripple envisioned. This is exactly the use case that the XRP ledger was built to serve. And now we're beginning to see not only cryptocurrency native companies utilizing these capabilities, but major financial institutions participating as well. From a long-term perspective, it's difficult to interpret this as anything other than extremely bullish. Interestingly, it appears that the market may finally be starting to recognize this reality. Several analysts have recently highlighted the current liquidity conditions surrounding XRP and pointed out that price action is approaching critical levels. Some analysts suggest that either one final downside liquidity sweep occurs or XRP rapidly moves toward significantly higher price targets. What's particularly notable is how XRP has behaved relative to broader market weakness. Even during periods where major equity indices experience substantial selling pressure, XRP has shown signs of stabilization. In my opinion, increased liquidity entering the ecosystem is beginning to provide structural support that wasn't previously present. When you examine the current market structure, much of the speculative leverage has already been removed. Many weak hands have already exited. Significant downside expectations appear to have already been priced into the market. This creates a situation where the remaining risk-reward profile begins to look increasingly attractive. There's another perspective that I think deserves attention. At certain points in financial markets, participants face a choice. They can allow short-term volatility, fear, and algorithmic trading behavior to force emotional decisions, or they can step back and evaluate whether the long-term investment thesis has actually changed. In the case of XRP, one could argue that the fundamental thesis has become stronger, not weaker. Despite price volatility, the original design assumptions that XRP supporters have discussed for years are receiving increasing validation. When evaluating blockchain technology, I think it's helpful to remember that there were essentially three major visions for the future of finance. The first was the Bitcoin vision, which assumed that governments, banks, and traditional institutions would eventually become irrelevant. While that idea was certainly revolutionary, it increasingly appears disconnected from how financial systems actually evolve. The second vision was represented by platforms like Ethereum, which attempted to create a universal computational platform capable of supporting virtually every imaginable use case. While this approach has produced incredible innovation, it also created enormous complexity. Supporting decentralized finance, gaming, NFTs, meme tokens, enterprise applications, and countless other use cases simultaneously introduces scalability and efficiency challenges. Then there is the XRP approach. The XRP thesis assumed that financial institutions would remain independent entities, continue operating within existing legal and regulatory frameworks, and require an efficient neutral settlement layer capable of transferring value between them quickly and securely. Rather than attempting to replace the existing financial system, XRP sought to optimize and modernize it. As individuals like Matt Hamilton continue to point out, every passing year seems to provide additional evidence supporting this original thesis. That's why I believe investors ultimately face a decision. Do they allow short-term market fluctuations to shake their conviction, or do they remain focused on the larger structural trends that are developing? Financial institutions themselves appear to be signaling that digital asset adoption is accelerating. The question then becomes, if institutional blockchain adoption truly occurs at scale, which networks are best positioned to benefit? Certainly, there are other contenders. Some people point to Canton. Others highlight XLM or various enterprise blockchain initiatives. And while multiple winners will likely emerge, it's difficult to ignore the positioning that XRP and Ripple have established over many years. Ripple possesses extensive institutional relationships, deep experience working with traditional finance, strong brand recognition, and a long history of engaging with regulators and financial organizations worldwide. Could another platform eventually overtake XRP? Of course it's possible. But based on current evidence, XRP remains one of the strongest candidates to become a foundational component of institutional digital finance infrastructure. After spending nearly a decade studying cryptocurrency markets, I've found myself becoming less interested in the broader crypto industry and increasingly interested in XRP specifically. That might sound strange to some people, but the deeper I dive into blockchain technology, the more I realize that many projects simply aren't solving problems that truly require blockchain solutions. Meanwhile, the problem XRP is attempting to solve, the efficient movement of value between global financial systems, is enormous. It's a real problem. It's a valuable problem. And perhaps most importantly, XRP appears uniquely positioned to address it at exactly the moment when the world may finally be ready for widespread adoption. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. Thank you for watching.